Testing, testing. I should be on now. Hopefully everything's working. Let's see. What's going on, Daniel? How's everything? Nvidia just reported earnings. Super excited. Let's do a quick overview before we take a closer look at their earnings call. But just, Jim, let me just kind of make sure everything's working. I haven't done a live stream in a long time. But we can see Nvidia stock price is up roughly 2.6% after earnings. I took a quick glance. Nothing too crazy on the bad side. And I think that's why the stock price... What's going on, Robert? How's it going? Robert, I think it was you who gave me the idea to make sure to do the live stream. So I just want to say thank you, Robert. I hope you guys can hear me just fine as well. It's been a while since I've live streamed. So what's going on, Alpakun? Hope everybody's doing well. It's been a while. So yeah, took a closer look at earnings. I do want to say the great news about earnings, I do want to say this quarter, is that it seems like to some extent maybe the worst has come already. We're going to see the guidance that the company gave. And it does seem like the upcoming quarter is going to be a small growth, sequential growth. So quarter three seems to might have been the bottom from what we're seeing right now. So I do believe that might be one of the main reasons the stock price is up a little bit, 2.7%. What's going on for Bonjour, Jose? Hopefully Nvidia does have a great earnings call. But let me just share what I have real quick. So overall, Nvidia results, and right, we can find all of this during their earnings in their earnings investors relations website. I just kind of highlighted some of the cool ones that I thought were pretty interesting. Data center revenue was $3.83 billion, and it was up 31% year over year. And actually, maybe we should start with this slide here. We can see data center did grow. It is up year over year, small growth quarter over quarter. The main reason they said the sequential growth was not that big was two things. First, just the overall Chinese market has seen a slowdown. The second thing, not only a slowdown, but because of the kind of exports restrictions, it kind of affected revenue a bit. But Nvidia is selling some of their alternative products to China, which has kind of helped soften that blow a little bit. We can see the biggest drop here what is going to be the gaming market. The gaming market was down year over year and sequential. We can see professional visualization down as well. These two markets are down just because of the overall inventory, right? The same inventory issues we're seeing globally in the semiconductor market. So they do mention that the gaming and professional visualization is down due to just inventory correction. The automobile industry, though, even though it's still small, we can see it is growing a nice amount. That would be roughly a 10% growth sequentially at least. And the overall saying, just with the overall amount of wins, OEM and others, this was a lot of cryptocurrency products. Obviously, that's going to be down. So we can see $5.9 billion. I do believe this is what they kind of mentioned before. I think their previous expectations was 5.7 plus or minus a few million. So some other things. The company, again, we talked a little bit about the macro environment correcting. They are saying that they are seeing not strong demand, but at least a strong growth phase or kind of foundation for all their new products. Ada Lovelace, for example, the new graphics cards sold out. The 4090 sold out in multiple places. They have the Hopper AI, they have the Bluefield and quantum networking solutions, and obviously Orin for the autonomous vehicle and robotics. So overall, great foundation for great growth in the quarters. The company did also do $3.75 billion in share repurchase and cash dividends. So they are. It seems like they are buying back some shares, which is pretty great. In the past 3 quarters, they did about $9.2 billion. So this was probably the quarter where they bought the most amount of shares. And this company barely pays a dividend. Most of that money is going in the form of share repurchase. What else do we have? Obviously, revenue is down a nice amount. Gross margin is also down roughly 12%. What I'm happy to see is revenue is down. We can see quarter over quarter, even though revenue is down, gross margins are higher. So again, I do believe that's probably because of that growth in the data center market. Data center solutions tend to have higher margins. So even though revenue is down on a quarterly basis, it is gross margins are up on a quarterly basis. And we can kind of see year over year, revenue is down a nice amount. Gross margins is also down, but it's not down as bad. Let's see what else do we have. In the data center market, numerous wins. Nvidia powers 90% of the new systems in the latest top 500 list of the supercomputers. I thought that was amazing. We also saw that multi-year collaboration. This was, to me, super bullish. The Microsoft collaboration that they announced today was really strong. This is going to be tens of thousands of A100, H100 GPUs. And obviously, the kind of partnership they announced I believe a few months ago with Oracle as well, deploying tens of thousands of more GPUs, including A100, H100 accelerators. And remember, Nvidia also kind of provides the networking solutions for these big players. So it's not just the GPU market. They also do the networking side as well with their acquisition of Mellanox. What I'm curious, I haven't really heard too much about recently their Hopper Grace CPU, right? The CPU, the ARM CPU. I feel like Nvidia has been pretty quiet with it in the past few months. I'm not sure why. Kaguya, yeah, it doesn't seem. Stock price, like you mentioned, not moving much, up 2%. I don't think there was anything crazy. There wasn't anything revolutionary from the reports. The only thing that might be, and remember, we have to remember, right? The stock price in the past 5 days is up roughly 7.4%. In the past month alone, it's up over 33%, right? So there's a lot of bottoming has kind of happened. So I don't think for the results that we had today, we would expect too much of a move, except if investors get a little bit too excited with that guidance. Kaguya, yeah, I mean, I can definitely see why certain people believe that. And this is what happens with most growth stocks, right? Currently overvalued. Growth stocks always seem overvalued, right? And that's the case. For me, I do come with like an engineering background. I worked in these great companies that have a lot of emerging technology. So from firsthand experience, I honestly get to say that I can see where some of the visionary of some of these products can go into. So again, this is definitely a growth stock. It's not one where you're looking at a PE ratio. It's not one where you're looking at the price to sales ratio. If you're a value investor, Nvidia is definitely not the play for you. This is more if you're looking into a growth style stock that, yes, it can be very, very volatile in the short term, maybe even the long term. But the potential of this kind of being a multi-bagger, in my opinion, is still pretty high. So it depends, right? I mean, and right now we unfortunately in the overall kind of semiconductor market, we are seeing a lot of kind of headwinds, right? The overall kind of decrease in the gaming market. You're seeing the overall consumer demand decreasing. You're seeing inventory correction. You're seeing a lot of semiconductors over ordering on some of their chips as well. But in the long term of things, you have tailwinds from the artificial intelligence, machine learnings that, like I mentioned, luckily I was able to work in that field. In that field where I've got firsthand experience that, hey, this is going to kind of change the world. So again, it definitely has a different, it's not for the faint of heart. Definitely many can agree that it's overvalued to some extent. But that data center market can continue to grow. The overall margins provided in the data center space can also continue to improve. We saw I just did an episode earlier today where I took a closer look at Nvidia, and they're gaining market share on the top 500 supercomputers, and that's insane, in my opinion, that their products are gaining that much share compared to just last year. Is AMD have similar issues, Wang? I do want to say yes, they do a lot of kind of inventory correction, Wang. The only thing really helping them is they do have a lot of embedded solutions due to their Xilinx acquisition, FPGA, system on chips, and that has helped them soften the blow a little bit. I do believe AMD is a little bit more correctly valued. I think AMD, in my opinion, AMD is a little bit safer play than Nvidia, and also has a huge growth potential. But I do believe AMD, because it's diversified in numerous spaces with numerous chips, it has maybe a little bit of a safetier net compared to Nvidia. So very interesting there. I just want, before the earnings call, I believe the earnings call starts in about 8 minutes. I did kind of highlight And let me just see. Um, Rahul, do you think chips in general will go down more because before they would go up? Hmm. I don't. What's going on, Chris? How's it going? Thanks for the live stream. No problem, Chris. And Chris, I gotta watch that video by Ticker Symbol U. I know you mentioned it. I actually want to do a video, kind of responding to it. I haven't really looked at it, but I know he definitely shares a lot of great points. So I wanna take a closer look at and maybe kind of do a nice respond of it. Um, Danny, Warren Buffett buying more TSM. I think the overall TSM purchase kind of shows validation to the growth in the semiconductor space, because TSM, right, that's the backbone of the overall semiconductor industry. So for the Berkshire Hathaway's team to be purchasing TSM, they have to believe that TSM is going to grow from here. The only way TSM can grow from here is if the overall semiconductor market does well. So I do believe that buy is a great thing. It's a great buy for the overall semiconductor industry. Danny, what do you think of investing in TSM? So I have a small position in TSM. To be honest, I do believe the semiconductor market as a whole, Danny, in the long term of things, is gonna outperform the overall market, right? That's my thought process. I do believe the whole semiconductor industry will be a better investment than the overall market for numerous years. It might not always seem that way, right? There might be years where it actually underperforms, but I do believe in the long term of things, if you look at that compounded annual growth rate, the semiconductor market will do well. I believe TSM, because I believe the semiconductor market will do well, I do believe TSM will do well. Will it a lot better than the overall semiconductor market? That's where I'm not too sure. I like investing in the semiconductor market, and I invest in the semiconductor market two ways. First, companies that are going to, I believe, outperform the semiconductor space. Companies like AMD and Nvidia. These are the companies that have a little bit more risk, obviously, but they have a higher potential of beating the semiconductor market. Then there's other companies that I personally believe, like TSM, that might beat the semiconductor market, but it might not be a huge difference. So instead of purchasing TSM, I personally like purchasing ETF instead, focus solely on the semiconductor space. Bakarani, my apologies for mispronouncing. How do you believe Nvidia will perform relative to the S&P 500 and big techs in 2023? I don't know. I believe in the long term of things, Nvidia will do really great. In the short term, like in a year from now, I don't know. This is a very, very volatile market. This is a very, very volatile stocks. We can have this stock go down dramatically in a matter of a year. We can also have it go up dramatically in a matter of a year. So for me, in the short term of things, I would say I don't know. In the long term of things, if we're adding multiple year time frame, I personally believe that the Nvidia will outperform the S&P 500 if the overall kind of, and this is the crazy thing about semiconductor companies. They are tech companies, and they need to keep investing. As long as their products continue to do well, as long as their engineering team continues to be strong, I believe they have a huge probability of beating the overall market in the long term of things. Him4, if you buy NVIDIA, TSM, and ASML, you will own the whole value chain of this industry. Very true, right? Those are some of the tip players there. ASML is definitely, they just reported their investors presentation. I know they have great numbers there. Again, Danny, you own NVIDIA and TSM, just need ASML. like whom said, you will have the whole chain if you purchase there. Kaguya, who is buying these chips? China. It actually, in the data center market, we're going to see most of their chips are actually being purchased by United States cloud company. The North America cloud industry, the North America data center industry is super, super strong. I mean, we're here complaining. We're here with the needs of these kind of clouding solutions. So in the data center market, a huge player is the North America industry. So let me just kind of show real quick some of the things I have highlighted. We can see real quick before earnings call, outlook for the fourth quarter of 2023 is revenue is expected to be $6 billion. This is a small, very, very small sequential growth quarter over quarter. But to me, it's telling me one thing, that, hey, maybe the bottoming is happening right now for the semiconductor industry. Maybe for the next few quarters, we might get a little bit flat, maybe go down a little bit. But I do believe the huge inventory correction that we've seen in the consumer space might be done, especially with the sequential. I would have to guess NVIDIA and management has to be very, very conservative with their reports right now, especially with the overall market. So for them, expecting a minor sequential growth to me is kind of telling me, hey, the bottom is near, and it's not going to go too crazy from here if we see another kind of pull down in form of consumer slowdown. The company does have about $8.2 billion remaining in share repurchase through December. I do believe this is going to continue to go. Unfortunately, the company has lost a nice amount. Even though they're positive in cash flow from operations, roughly $400 million, it is down a nice amount versus a year ago. Obviously, the overall huge hit in revenue. Inventory, they have built up a nice amount of inventory, but they have new data center solutions. They have new gaming architecture solutions. They have new kind of autonomous driving solutions. So to me, seeing inventory growing, not much of a red flag, especially since they just came out with new products. Company has about $13 billion in cash. They do mention two reasons for it dropping $6 billion versus a year ago. Two main reasons. First, share repurchase. Second, just the overall change in free cash flow, but they still have a nice amount of cash at hand. I don't think I have anything too much that I haven't mentioned already. Again, data center market, main growth is based on U.S. cloud service provider and consumer internet companies. So the data center market, very, very strong player here in the United States. The overall sequential growth slowdown is impacted by the softness in China. We've heard this from numerous companies. The Chinese kind of cloudy market has definitely seen a bit of a slowdown, but they are kind of the restrictions impacted the third quarter revenue, with the decline largely offset by sales of alternative products into China. So NVIDIA has kind of created new solutions that are able to kind of bypass the restrictions to some extent. So that's obviously helping out with the revenue. I'm going to guess that's going to be a big question during the earnings call that should be coming up pretty soon. So again, I don't expect earnings to really move the stock price right now. We can see 2% up. The only thing I would want to learn a little bit more is the Q&A section. I'm pretty sure we're going to get a lot of questions about, one, Grace, the Hopper CPU that NVIDIA is building. Two, kind of the data center demand looking forward. Three, kind of the gaming and consumer inventory correction. And four, I want to say more kind of questions on the regulations that are happening in this space. So definitely, if you guys have any questions, feel free to post. Also, if you guys haven't, I am creating. I know my main channel, I post videos on a daily basis, but I am super passionate, you guys know, of the semiconductor market. So make sure to subscribe to my new channel. It's only semiconductor investing, and I only post 1 or 2 videos a week. I usually have a host, and we only talk about the semiconductor space. That's solely it. It's not going to be a video daily, so I know, and it's a longer content, right? It's a podcast, an upcoming #1 semiconductor podcast. Make sure to click that. The link is pinned above. So let's see if we can get into this earnings call and see. It's going to go down here. So I'm going to have the Cherry Tigers. I'm subscribed to the new content. Loving it so far. Appreciate it. All right, so let's listen to the webcast. Register as guest. Let me just in case you guys email me a lot of hype mail. Let me just see. I'm an individual.
Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice
What's
President
going on,
and Chief Financial Officer.
All right, guys. So let me know if the volume is loud enough for the earnings call, or if I should put it louder.
The webcast will be available for replay until the conference call to discuss our financial results for the fourth quarter and fiscal 2023. The content of today's call is NVIDIA's property. It can be reproduced or transcribed without our prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number
feel free
of
to ask questions during the earnings call. I'm going to be doing my commentary during it.
Materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, November 16, 2022, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. With that, let me turn the call over to Colette.
Thanks, Simona. Q3 revenue was $5.93 billion, down 12%
Ildar, I like
sequentially
AMD
and down
better.
17%
Actually,
year-on-year.
I'll
We
answer that
delivered
question in a
record
bit,
data
Ildar.
center and automotive revenue, while our gaming and pro visualization platforms declined as we worked through channel inventory corrections and challenging external conditions. Starting with data center, revenue of $3.83 billion was up 1% sequentially and 31% year-on-year. This reflects very solid performance in the face of macroeconomic challenges, new export
the data center
controls,
market is the
and
huge
lingering
growth
supply
opportunity
chain
here.
disruptions. Year-on-year, growth was driven primarily by leading U.S. cloud providers and a broadening set of consumer internet companies for workloads such as large language models, recommendation systems, and generative AI.
Yeah, social
As the
platforms are
number
buying
and
a lot of
public
artificial
cloud
intelligence
computing and
solutions.
internet service companies deploying NVIDIA AI grows, our traditional hyperscale definition will need to be expanded to convey the different end market use cases. We will align our data center customer commentary going forward accordingly. Other vertical industries such as automotive and energy also contributed to growth with key workloads relating to autonomous driving, high-performance computing, simulations, and analytics. During the quarter, the U.S. government announced new restrictions impacting exports of our A100 and H100-based products to China and any product destined for certain systems or entities in China. These restrictions impacted third quarter revenue, largely offset by sales of alternative products into China. That said, demand in China more broadly remains soft, and we expect that to continue in the current quarter. We started shipping our flagship H100 data center GPU based on the new Hopper architecture in Q3. H100-based systems are available starting this month from leading server makers including Dell, Hewlett-Packard Enterprise, Lenovo, and Supermicro.
Yeah, I think the
Early
H100
next year,
is going to do amazing for data center.
The first H100-based cloud instances will be available on Amazon Web Services, Google Cloud, Microsoft Azure, and Oracle Cloud Infrastructure. H100 delivered the highest performance and workload versatility for both AI training and inference in the latest MLPerf industry benchmarks. H100 also delivers incredible value. Compared to the previous generation, for equivalent AI performance, it offers 3x lower total cost of ownership while using 5x fewer server nodes and 3.5x less energy. Earlier today, we announced a multi-year collaboration with
This was probably
Microsoft
my favorite
to
news
build
for the
an
day.
advanced cloud-based AI supercomputer to help enterprises train, deploy, and scale AI, including large, state-of-the-art models. Microsoft Azure will incorporate our complete AI stack, adding tens and thousands of A100 and H100 GPUs, Quantum 2 400 gigabit per second InfiniBand networking, and the NVIDIA AI Enterprise software suite to
Remember,
its
NVIDIA
platform.
has more than GPUs. They have
Oracle and
networking
NVIDIA
solutions
are also
and
working together
software.
to offer AI training and inference at scale to thousands of enterprises. This includes bringing to Oracle Cloud Infrastructure the full NVIDIA accelerated computing stack and adding tens of thousands of NVIDIA GPUs, including the A100 and H100. Cloud-based high-performance computing company Rescale is adopting NVIDIA AI Enterprise and other software to address the industrial scientific community's rising demand for AI in the cloud. NVIDIA AI will bring new capability to Rescale's high-performance computing as a service offerings, which include simulation and engineering software used across industries. Networking posted strong growth driven by hyperscale customers and easing supply constraints. Our new Quantum 2 40 gigabit per second InfiniBand and Spectrum Ethernet networking platforms are building momentum. We achieved an important milestone this quarter with VMware, whose leading server virtualization platform, vSphere, has been re-architected over the last 2 years to run on DPUs and now supports our Bluefield DPUs. Our joint enterprise AI platform is available first on Dell PowerEdge servers.
They had so many news here in the data center market. Most of them are the ones here announced during their press release, so nothing crazy that we're going to learn here.
Is expanding, including Arista, Checkpoint, Juniper, Palo Alto Networks, and Red Hat. The latest top 500 list of supercomputers released this week at Supercomputing 22 has the highest ever number of NVIDIA-powered systems, including 72% of the total and 90% of new systems on the list.
That's
Moreover,
insane. 72%
NVIDIA
of total.
powers 23 of the top 30 of the Green 500 list, demonstrating the energy efficiency of accelerated computing. The number one most energy efficient system is the Flatiron Institute's Henry, which is the first top 500 system featuring our H100 GPUs. At GTC, we announced the NVIDIA Omniverse Computing System, or OVX, reference designs featuring the new L40 GPU based on the Ada Lovelace architecture. These systems are designed to build and operate 3D virtual worlds using NVIDIA Omniverse Enterprise.
So does anybody here have both
NVIDIA
AMD
OVX
and
systems
NVIDIA,
will be
or are you guys just
available
owning
from
NVIDIA?
Inspur, Lenovo, and Supermicro by early 2023. Lockheed Martin and Jaguar Land Rover will be among the first customers to receive OVX systems. We are further expanding our AI software and services offerings with NVIDIA and BioNeMo large language model services, which are both entering early access this month. These enable developers to easily adapt large language models and deploy customized AI applications for content generation, text summarization, chatbox, code development, protein structure, and biomolecular property predictions.
Rick and Scott, do you guys
Moving
own
to
any
gaming.
other semiconductor stocks, or
Revenue
just
of
NVIDIA for the
$1.57
semiconductor
billion
market?
was down 23% sequentially and down 51% from a year ago, reflecting lower sell-in to partners to help align channel inventory levels with current demand expectations. We
Hey,
believe
Kimberly, how's it
channel
going? Hey,
inventories
Scott.
are on track
Hey, Rick.
to approach normal levels as we exit Q4. Sell-through for our gaming products was relatively solid in the Americas and EMEA, but softer in Asia-Pac as macroeconomic conditions and COVID lockdowns in China continued to weigh on consumer demand. Our new Ada Lovelace GPU architecture had an exceptional launch. The first Ada GPU, the GeForce RTX 4090, became available in mid-October amid tremendous demand.
I wonder if they're going to
and
talk about
positive
the pins
feedback from the
burning,
gaming community.
or if that might be a question from analysts.
We sold out quickly in many locations and are working hard to keep up with demand. The next member of the Ada family, RTX 4080, is available today. The RTX 40 series GPUs features DLSS 3, the neural rendering technology that uses AI to generate entire frames for faster gameplay. Our third generation RTX technology has raised the bar for computer graphics and helped supercharge gaming. For example, the 15-year-old classic game Portal, now reimagined with full ray tracing and DLSS 3, has made it on Steam's top 100 most
Rick, I do believe, I
wished-listed
kind of
games.
agree. I feel like they
The
do have
total
some
number of
form of
RTX
technology
games
edge right
and
now.
applications now exceeds 350. There is tremendous energy in the gaming community that we believe will continue to fuel strong fundamentals over the long term. The number of simultaneous users on Steam just hit a record of 30 million, surpassing the prior peak of 28 million in January. Activision's Call of Duty Modern Warfare 2 set a record for the franchise with more than 800 million in opening weekend sales.
Nice, Scott. I feel like if I was to ever go back to work in the engineering field, I would definitely like to apply to
Top Gun
NVIDIA.
Maverick and Doctor Strange in the Multiverse of Madness. And this month's League of Legends World Championship in San Francisco sold out in minutes, with 18,000 esports fans packed the arena where the Golden State Warriors play. We continue to expand the GeForce Now cloud gaming service. In Q3, we added over 85 games to the library, bringing the total to over 1,400. We also launched GeForce Now on the new gaming devices, including Logitech Cloud G handheld, cloud gaming Chromebooks, and Razer 5G Edge. Moving to ProViz. Revenue of $200 million was down 60%
I agree with you. If
and
AMD
down
didn't have
65% from a year
AMD
ago,
would be definitely
reflecting
crashing
lower sell-in to partners
in their
to
most
help
recent earnings.
align channel inventory levels with the current demand expectations. These dynamics are expected to continue in Q4. Despite near-term challenges, we believe our long-term opportunity remain intact, fueled by AI, simulation, computationally
Yes, they believe
intensive
inventory
design
correction
and
will
engineering
remain
workloads.
continue to
At
happen in
GTC,
Q4.
we announced Nvidia Omniverse Cloud Services, our first software and infrastructure as a service offering, enabling artists, developers, and enterprise teams to design, publish, and operate metaverse applications from anywhere on any device. Omniverse Cloud Services runs on Omniverse Cloud Computer, a computing system comprised of NVIDIA OVX for graphics and physics simulation, NVIDIA HGX for AI workloads, and the NVIDIA Graphics Delivery Network, a global-scale distributed data center network for delivering low-latency metaverse graphics on the edge. Leaders in some of the world's largest industries continue to adopt Omniverse. Home improvement retailer.
I agree,
Lowe's
Rick.
is
I want to
using
see
it
how they're going to
help
continue to
design,
kind of
build, and operate
synergize those
digital twins
technologies
for their
together.
stores. Charter Communications, an advanced analytics company, Heavy AI, are creating Omniverse-powered digital twins to optimize Charter's wireless network. And Deutsche Bahn, operator of Germany's national railway, is using Omniverse to create digital twins of its rail network and train AI models to monitor the network, increasing safety and reliability. Moving to automotive. Revenue of $251 million.
Automotive, super small,
increased
but I do believe this is going to
14%
continue to grow a
sequentially
nice amount.
and 86% from a year ago. Growth was driven by an increase in AI automotive solutions as our customers drive Orin-based production ramps continue to scale. Automotive has great
Because it's not
momentum
only for
and is on
automotive,
its
it's
way
also
to
for
our
things
next
like robotics.
multi-billion-dollar platform. Volvo Cars unveiled the all-new flagship Volvo EX90 SUV powered by the NVIDIA Drive platform. This is the first model to use Volvo's software-defined architecture with a centralized core computer containing both Drive Orin and Drive Xavier, along with 30 sensors. Other recently announced design wins and new model introductions include Hozon, Otto, Neo, Polestar, and Xpeng. At GTC, we also announced that NVIDIA Drive Thor Superchip, the successor to Orin in our automotive SoC roadmap. Drive Thor delivers up to 2,000 teraflops of performance and leverages technologies introduced in our Grace, Hopper, and Ada architectures. It is capable of running both the automated drive.
Yeah, Rick, when I
and
used to work at
in-vehicle
some crazy
infotainment
companies,
systems,
Xilinx and
simultaneously
those
offering a
FPGAs
leap of performance
were always being
while
used. So
reducing
definitely a huge
cost
market
and
there.
energy
Also, guys,
consumption.
while you guys are not, if you
Drive
guys
Thor
haven't
will be
subscribed, make sure to
available
click
for
the pinned comment.
automakers
It's the #1 upcoming
2025
semiconductor
model
podcast.
with Geely-owned automaker
Weekly episodes
Zeekr
on
as the
semiconductor,
first
so make sure to
announced
subscribe.
customer. Moving to the rest of the P&L, GAAP gross margins was 53.6%, and non-GAAP gross margins was 56.1%. Gross margins reflects $702 million in inventory charges, largely related to lower data center demand in China, partially offset by a warranty benefit of approximately $70 million. Year-on-year, GAAP operating expenses were up 31%.
Yeah, I'm liking that
and non-GAAP
gross margins and
operating
non-GAAP
expenses
gross
were up
margins are up
30%,
sequentially.
primarily
So that's great
due
news.
to higher compensation expenses related to headcount growth and salary increases, and higher data center infrastructure expenses. Sequentially, both GAAP and non-GAAP operating expense growth was in the single-digit %, and we plan to keep it relatively flat at these levels over the coming quarters. We returned $3.75 billion to shareholders in the form of share repurchases and cash dividends. At the end of Q3, we had approximately $8.3 billion remaining under our share repurchase authorization through December 2023. Let me turn to the outlook for the fourth quarter of fiscal 2023. We expect our data center revenue to reflect early production shipments of the H100, offset by continued softness in China. In gaming, we expect to resume sequential growth with our revenue still below end demand as we
Nice
continue
sequential
to work
growth
through
in gaming.
the channel inventory
So it seems like the
correction.
bottom has kind of hit to some
And in
extent.
automotive, we expect the continued ramp of our Orin design wins. All in, we expect modest sequential growth driven by automotive, gaming, and data center.
That's great news in my opinion.
Revenue is expected to be $6 billion, plus or minus 2%. GAAP and non-GAAP gross margins are expected to be 63.2% and 66%.
We can also see those
respectively,
gross margins
plus or
up a
minus
nice
50
amount
basis points.
sequentially
GAAP
as well,
operating
back in those
expenses
60s
are
opposed to the
expected to be
50s.
approximately $2.56 billion. Non-GAAP operating expenses are expected to be approximately $1.78 billion. GAAP and non-GAAP other income and expenses are expected to be an income of approximately $40 million, excluding gains and losses on non-affiliated investments. GAAP and non-GAAP tax rates are expected
Just taking
to be
a quick look at stock
9%,
price. Very quiet
plus
right
or
now.
minus 1%, excluding any discrete items. Capital expenditures are expected to be approximately $500 million to $550 million. Further, financial details are included in the CFO commentary and other information available on our IR website. In closing, let me highlight upcoming events for the financial community. We'll be attending the Credit Suisse Conference in Phoenix on November 30th, the Arete Virtual Tech Conference on December 5th, and the JP Morgan Forum on January 5th in Las Vegas. Our earnings call to discuss the results of our fourth quarter and fiscal 2023 are scheduled for Wednesday, February 22nd. We will now open the call for questions.
All right, the
Operator,
best
could you
part,
please
Q&A
poll for
section.
questions?
Thank you. I would like to remind everyone, in order to ask a question, press star, then the number 1 on the telephone keypad. As a reminder, please limit yourself to one question. We will pause for just a moment to compile the Q&A roster. Your first question comes from the line of Vivek Arya with Bank of America Securities. Your line is now open.
Thanks for taking my question. Colette, I just wanted to clarify first. I think last quarter you gave us a sell-through rate for your gaming business at about $2.5 billion a quarter. I think you said China is somewhat weaker, so I was hoping you could update us on what that sell-through rate is right now for gaming. And then, Jensen, the question for you, a lot of concerns about large hyperscalers cutting their spending and pointing to a slowdown. So if, let's say, U.S. cloud capex is flat, or slightly down next year, do you think your business can still grow in the data center, and why?
Great
Yes,
question
thanks for
there,
the
especially since
question.
we're seeing
Let me
CAPEX
first
kind of
start with
being
the
flat or
sell-through
decreasing year
on
over
our
year.
gaming business. We had indicated if you put 2 quarters together, we would see approximately $5 billion in normalized sell-through for our business. Now, during the quarter, sell-through in Q3 was relatively solid. We've indicated that although China lockdowns continue to challenge our overall China business, it was still relatively solid. Notebook sell-through was also quite solid, and desktop a bit softer, particularly in that China and Asia areas. We expect, though, stronger end demand, though, as we enter into Q4, driven by the upcoming holidays, as well as the continuation of the Ada adoption.
In fact, our data center business is indexed to two fundamental dynamics. The first has to do with general purpose computing no longer scaling. And so acceleration is necessary to achieve the necessary level of cost efficiency scale and energy efficiency scale so that we can continue to increase workloads while saving money and saving power.
Energy efficiency is becoming very
Accelerated
important.
computing is recognized generally as the path forward as general purpose computing slows. The second dynamic is AI. And we're seeing surging demand in some very important sectors of AI, important breakthroughs in AI. One is called deep recommender systems, which is quite essential now to get the best content or item or product to recommend to somebody who's using a device that is, like a cell phone or interacting with a computer just using voice. You need to really understand the nature, the context of the person making the request and make the appropriate recommendation to them. The second has to do with large language models. This started several years ago with the invention of the transformer, which led to BERT, which led to GPT-3, which led to a whole bunch of other models now associated with that. We now have the ability to learn representations of languages of all kinds. It could be human language, it could be the language of biology, it could be the language of chemistry. And recently, I just saw a breakthrough called Genes LM, which is one of the first example of learning the language of human genomes. The third has to do with generative AI. You know that the first 10 years we've dedicated ourselves to perception AI. The goal of perception, of course, is to understand context, but the ultimate goal of AI is to make a contribution, to create something, to generate product. And this is now the beginning of the era of generative AI. You probably see it all over the place, whether they're generating images or generating videos or generating text of all kinds. And the ability to augment our performance, to enhance our performance, to make productivity enhanced, to reduce cost, and improve whatever we do with whatever we have to work with. Productivity is really more important than ever. And so you could see that our company is indexed to two things, both of which are more important than ever, which is power efficiency, cost efficiency, and then of course productivity. And these things are more important than ever. And my expectation is that we're seeing all this strong demand and surging demand for AI for these reasons.
Your next question comes from the
You just gave
line
more
of
of a top-level
CJ
answer. I
Muse
really
with
wanted to hear more
Evercore.
about the
Your line
slowdown
is now
in some
open.
markets.
Yeah, good afternoon. Thank you for taking the question. You started to bundle NVIDIA AI Enterprise now with the H100. I'm curious if you can talk about how we should think about timing around software monetization and how we should kind of see this flow through the model, particularly with a focus on the AI Enterprise and Omniverse side of things. Thank you.
Yeah, thanks, CJ. We're making excellent progress in NVIDIA AI Enterprise. In fact, you saw probably that we made several announcements this quarter associated with clouds. You know that NVIDIA has a rich ecosystem, and over the years, our rich ecosystem and our software stack has been integrated into developers and startups of all kinds. But more than ever, we're at the tipping point of clouds, and that's fantastic because If we could get NVIDIA's architecture and our full stack into every single cloud, we could reach more customers more quickly. And this quarter, we announced several initiatives. One has several partnerships and collaborations. One that we announced today, which has to do with Microsoft and our partnership there. It has everything to do with scaling up AI, because we have so many startups clamoring for large installations of our GPUs so that they could do large language model training and building their startups, and scale out of AI to enterprise and all of the world's internet service providers. Every company we're talking to would like to have the agility and the scale flexibility of clouds. And so over the last year or so, we've been working on moving all of our software stacks to the cloud, or of our platform and software stacks to the cloud. And so today we announced that Microsoft and ourselves are going to standardize on the NVIDIA stack for a very large part of the work that we're doing together, so that we can take a full stack out to the world's enterprise. That's all software included. We a month ago announced the same similar.
I feel like listening to these responses more like a class, learning more about strategy, like you mentioned.
A leader in high-performance computing cloud has integrated NVIDIA AI into their stack. Monai has been integrated into GCP. And we announced recently NeMo large language model and BioNeMo large language model to put NVIDIA software in the cloud. And we also announced Omniverse is now
fisherman to the moon.
The goal of all of this is to move the NVIDIA platform full stack software into the cloud, so that we can engage customers much more quickly, and customers could engage our software if they would like to use it in the cloud. It's per GPU instance hour. If they would like to utilize our software on-prem, they could do it through software license. And so license and subscription. And so in both cases, we now have software available practically everywhere you would like to engage it. The partners that we work with are super excited about it, because NVIDIA's rich ecosystem is global, and this could bring both new consumption into the cloud for both them and ourselves, but also connect all of these new opportunities to the other APIs and other services that they offer. And so our software stack is making really great progress.
Your next question comes from the line of Chris Caso with Credit Suisse.
And that software stack is going to help increase margins, so that's a great thing.
Yes, thank you. Good evening. Wonder if you could give some more color about the inventory charges you took in the quarter, and then internal inventory in general. In the documentation, you talked about that being a portion of inventory on hand plus some purchase obligations, and you also spoke in your prepared remarks that some of this was due to China data centers. So if you can clarify what was in those charges, and then in general for your internal inventory, does that still need to be worked down, and what are the implications as if that needs to be worked down over the next couple of quarters?
Hey Scott, for what reason were you able to meet him?
Thanks for the question, Chris. So as we highlighted in our prepared remarks, we booked an entry of $702 million for inventory reserves within the quarter. Most of that, primarily all of it, is related to our data center business, just due to the change in expected demand looking forward for China. So when we look at the data center products, a good portion of this was also the A100, which we wrote down. Now looking at our inventory that we have on hand.
Oh wow, inventory charges were on data center solutions. Interesting.
Has increased. A lot of that is just due to our upcoming architectures coming to market. Our Ada architecture, our Hopper architecture, and even more in terms of our networking business. We have been building for those architectures to come to market, and that's what you see. We are always looking at our inventory levels at the end of each quarter for our expected demand going forward. But I think we've done a solid job, at least in this quarter, just based on that expectation going forward.
Your next question comes from the line of Timothy Arcuri with UBS.
Amazing.
Your line is now open.
Pick up a 4090. Nice.
Thanks a lot. Colette, can you, I have a two-part question. First, is there any effect of stockpiling in the data center guidance? I ask because you now have the A800 that is sort of a modified version of the A100 with a lower data transfer rate. So one could imagine that customers might be stocking that while they can still get it. And I guess the second part of that is related to the inventory charge. Can you just go into that a little bit more? Because last quarter it made sense that you took a charge because revenue was less than you thought, but revenue came in pretty much in line, and it sounded like China was a net neutral. So is the charge related to just working A100 inventory down faster? Is that what the charge is related to? Thanks.
This is a great question. I like this one a lot.
Sure. So let me talk about the first statement that you indicated. Most of our data center business that we see is we're working with customers specifically on their needs to build out accelerated computing and AI. It's just not a business in terms of where units are being held for that. They're usually for very, very specific products and projects that we see. So I'm going to answer no, nothing that we can see. Your second question regarding the inventory provisions. At the end of last quarter, we were beginning to see softness in China. We have always been looking at our needs long term. It's not a statement about the current quarter in inventory. As you can see, it usually takes 2 or 3 quarters for us to build product for the future demand. So that's always a case of the inventory that we are ordering. So now looking at what we've seen in terms of continued lockdowns, continued economy challenges in China, it was time for us to take a hard look of what do we think we'll need for data center going forward, and that led to our write-downs.
Your next question comes from the line of Stacy Rasgon with Bernstein. Your line is now open.
Hi, guys. Thanks for taking my question. Colette, I had a question on the commentary you gave on the sequentials. It kind of sounded like data center maybe had some China softness issues. You said gaming resuming sequential growth, but then you said sequential growth for the company driven by auto, gaming, and data center. How can all three of those grow sequentially if the overall guide is kind of flattish? Are they all just like growing just a little bit, or is one of them actually down? Like, how do we think about the segments into Q4 given that commentary?
Yes, thanks, Stacy. So your question is regarding the sequentials from Q3 to our guidance that we provided for Q4. As we are seeing the numbers in terms of our guidance, you're correct, is only growing about $100 million, and we've indicated that 3 of those platforms will likely grow just a little bit. But our pro visualization business, we think is going to be flattish and likely not growing as we're still working.
I think they're being very, very conservative here on this
channel
this
inventory
outlook.
levels to get to the right amount. It's very difficult to say which will have that increase, but again, we are planning for all 3 of those different market platforms to grow just a little bit.
Your next question comes from the line of Mark Lipacis with Jefferies. Your line is now open.
Hi, thanks for taking my question. Jensen, I think for you, you've articulated a vision for the data center where a solution with an integrated solution set of a CPU, GPU, and DPU is deployed for all workloads or most workloads, I think. Could you just give us a sense of or talk about where is this vision in the penetration cycle and maybe talk about Grace's importance for realizing that vision. What will Grace deliver versus an off-the-shelf x86? Do you have a sense of where Grace will get embraced first or the fastest within that vision? Thank you.
Thanks, Mark. Grace's data moving capability is off the charts. Grace also is memory coherent to our GPU, which allows our GPU to expand its effective GPU memory, fast GPU memory, by a factor of 10. That's not possible without special capabilities that are designed between Hopper and Grace and the architecture of Grace. And so it was designed, Grace is designed for very large data processing at very high speeds. Those applications are related to, for example, data processing is related for recommender systems, which operates on petabytes of live data at a time. It's all hot. It all needs to be fast so that you can make a recommendation within milliseconds to hundreds of millions of people using your service. It is also
Scott, what are you
quite
hearing?
effective
Maybe if you could share a top-level overview
AI
from
training,
some of your
machine
peoples.
learning. And so those kind of applications are really terrific. Grace, I think I've said before that we will have production samples in Q1, and we're still on track to do that.
Your next question comes from the line of Harlan Sur with JP Morgan. Your line is now open.
Good afternoon. Thanks for taking my question.
I think we might have like
Your
two more
data
questions.
center networking business, I believe, is driving about $800 million per quarter in sales. Very, very strong growth over the past few years. Near term, as you guys pointed out, and the team is driving strong NIC and Bluefield attached to your own compute solutions like DGX and more partner announcements like VMware. But we also know that networking has pretty large exposure to general purpose cloud and hyperscale compute spending trends. So what's the visibility and growth outlook for the networking business over the next few quarters?
Yeah, if I could take that. First, thanks for the question. Our networking, as you know, is heavily indexed to high performance computing. We don't serve the vast majority of commodity networking. All of our networking solutions are very high end, and they're designed
Yeah,
for
Scott, I know their networking
data centers that
solutions
move a lot of
amazing.
data. Now, if you have a hyperscale data center these days, and you are deploying a large number of AI applications, it is very likely that the network bandwidth that you provision has a substantial implication on the overall throughput of your data center. So the small incremental investment they make in high performance networking translates to billions of dollars of savings, frankly, in provisioning the service, or billions of dollars more throughput, which increases their economics. And so these days, with disaggregated and AI AI provisioning in data centers, high performance networking is really quite fantastic, and it pays for itself right away. But that's where we are focused in high performance networking and provisioning AI services in the AI applications that we focus on. You might have noticed that NVIDIA and Microsoft are building one of the largest AI infrastructures in the world, and it is completely powered by NVIDIA's InfiniBand 400 gigabits per second network. And the reason for that is because that network pays for itself instantaneously. The investment that you're going to put into the infrastructure is so significant that if you were to be dragged by slow networks, obviously the efficiency of the overall infrastructure is not as high. And so in the places where we focus, networking is really quite important. It goes all the way back to when we first announced the acquisition of Mellanox.
Yeah, remember, and like you mentioned, Scott, it's not just
time,
GPUs, right? It's going to be the software stack and
they were
those
doing
Mellanox
about
solutions,
a few
those
$100 million a
infinite
quarter,
band
about $400
switches.
million a quarter. And now we're doing what they used to do in the old days, in a year, practically coming up in a quarter. And so that kind of tells you about the growth of high performance networking. It isn't indexed to overall enterprise and data center spend, but it is highly indexed to AI adoption.
Your next question comes from the line of Aaron Rakers with Wells Fargo. Your line is now open.
Yeah, thanks for taking the question. I want to expand on the networking question a little bit further. You know, when we look at the Microsoft announcement today, we think about what Meta is doing on the AI footprint that they're deploying. You know, Jensen, can you help us understand like where your InfiniBand networking sits relative to like traditional data center switching, and maybe kind of build on that how you're positioning Spectrum 4 in the market? Does that compete against a broader set of opportunities in the Ethernet world for AI fabric networking? Thank you.
Yeah, thanks, Aaron. The math is like this. If you're going to spend $20 billion on an infrastructure and the efficiency of that overall data center is improved by 10%, the numbers are huge.
Agree.
And when we do these large language models and recommender systems, the processing is done across the entire data center. And so we distribute the workload across multiple GPUs, multiple nodes, and it runs for a very long time. And so the importance of the network can't be overemphasized. And so the difference of 10% in overall improvement in efficiency, which is very easy to achieve. The difference between NVIDIA's InfiniBand, the entire software stack, with what we call Magnum I/O, which allows us to
Scott, appreciate that insight you're sharing here.
in the
Amazing.
network
Thank
itself. A lot of software is running in the network itself, not just moving data around. We call it in-network computing because a ton of software is done at the edge of within the network itself. We achieve significant differences in overall efficiency. And so if you're spending billions of dollars on the infrastructure, or even hundreds of millions of dollars on the infrastructure, the difference is really quite profound.
Your next question comes from the line of Ambrish Srivastava with BMO. Your line is now open.
Hi, thank you very much. I actually had a couple of clarifications. Colette, on the data center side, is it a fair assumption that compute was down Q-over-Q in the reported quarter? Because the quarter before, Mellanox or the networking business was up as it was called out. And again, you said it grew quarter over quarter. So is that a fair assumption? And then I had a clarification on the USG ban. Initially, it was supposed to be a $400 million, really going to what the government was trying to firewall. Is the A800, I'm just trying to make sure I understand it, isn't that against the spirit of what the government is trying to do, i.e. firewall high performance compute, or is A800 going to a different set of customers? Thank you.
Thank you for the question. So looking at our compute for the quarter is about flattish. Yes, we're seeing also growth in terms of our networking, but you should look at our Q3 compute is about flattish with last quarter.
Ambrish, A800, the hardware of A800 ensures that it always meets U.S. government's clear test for export control. And it cannot be customer reprogrammed or application reprogrammed to exceed it. It is hardware limited. It is in the hardware that determines A800's capabilities. And so it meets the clear test in letter and in spirit. We raised the concern about the $400 million of A100s because we were uncertain about whether we could execute the introduction of A800 to our customers and through our supply chain in time. The company the company did remarkable feats to swarm this situation.
I have a
and
thought
make
on that
sure
question, Rick. I just
our
want to
business
finish
was
his
not
answer before I
affected
mention.
and our customers were not affected. But A800 hardware surely ensures that it always meets U.S. government's clear test for export control.
Your next question comes from the line of William Stein with Truist Securities. Your line is now open.
Thank you. I'm hoping you can discuss the pace of H100 growth as we progress over the next year. We've gotten a lot of questions as to whether the ramp in this product should look like a sort of traditional product cycle where there's quite a bit of pent-up demand for this significant improved performance product, and that there's supply available as well. So does this rollout sort of look relatively typical from that perspective, or should we expect a more perhaps delayed start of the growth trajectory where we see maybe substantially more growth in, let's say, second half of 23?
I think this is all going to be dependent on
H100 ramp is different than the A100 ramp in several ways. The first is that the TCO, the cost benefits, the operational cost benefits, because of the energy savings, because every data center is now power limited, and because of this incredible transformer engine that's designed for the latest AI models. The performance over Ampere is so significant that and because of the pent-up demand for Hopper, because of these new models.
Oh, he said H100. I thought he said A800.
That I spoke about earlier, deep recommender systems and large language models and generative AI models. Customers are clamoring to ramp Hopper as quickly as possible, and we are trying to do the same. We are all hands on deck to help the cloud service providers stand up these supercomputers. Remember,
H100. I would
NVIDIA
expect
is the only
demand
company in the
here
world
super
that
strong.
produces and ships semi-custom supercomputers in high volume. It's a miracle to ship one supercomputer every 3 years. It's unheard of to ship supercomputers to every cloud service provider in a quarter. And so we're working hand in glove with every one of them, and every one of them are racing to stand up Hoppers. We expect them to have Hopper cloud services stood up in Q1, and so we are expecting to ship some volume. We're expecting to ship production.
I think it's going to be
in Q4,
impressive, the shift
and
of
then we're expecting to
H100
ship
in the supercomputer
large
list
volumes
next
in
year
Q1.
for November
That's
of 2023.
a faster transition than Ampere. And so it's because of the dynamics that I've described.
Your next question comes from the line of Matt Ramsey with Cowen. Your line is now open.
This is probably the
thank you very much. Good afternoon. I guess, Colette, I heard in your script that you had talked about maybe a new way of commenting on or reporting hyperscaler revenue in your data center business. And I wonder if you could maybe give us a little bit more detail about what you're thinking there and what sort of drove the decision. And I guess the derivative of that, Jensen, how that decision to talk about the data center business to hyperscalers differently, I mean, what does that mean for the business? That it's just a reflection of where demand is and you're going to break things out differently, or is something changing about the mix of
I was
I
curious
guess internal
when I heard
properties
that,
versus
why they're going to break it down a bit
vertical
different.
industry demand within the hyperscale customer base? Thank you.
Yes, Matt, thanks for the question. Let me clarify a little bit in terms of what we believe we should be looking at when we go forward and discussing our data center business. Our data center business is becoming larger and larger, and our customers are complex. Now, when we talk about hyperscale, we tend to talk about 7, 8 different companies, but the reality is there's a lot of very large companies that we could add to that discussion based on what they're purchasing. Additionally, looking at the cloud, looking at our cloud purchases and what our customers are building for the cloud is an important area to focus on, because this is really where our enterprise is, where our researchers, where our higher education is also purchasing. So we're trying to look for a better way to describe the color of what we're seeing in the cloud and also give you a better understanding of some of these large installments that we're seeing in the hyperscales.
Yeah, let me double click on what Colette just said, which is absolutely right. There are two major dynamics that's happening. First, the adoption of NVIDIA AI in internet service companies around the world.
Rick, and this is
The number and the scale
this is
by
gonna
which they're
answer
doing
your
it
question
has
previously.
grown a lot. Internet service companies and these are internet service companies that offer services, but they're not public cloud computing companies. The second factor has to do with cloud computing. We are now at the tipping point of cloud computing. Almost every enterprise in the world has both a cloud first and a multi-cloud strategy. It is exactly the reason why all of the announcements that we made this last quarter since GTC, about all the new platforms that are now available in the cloud. A CSP, a hyperscaler, are two things to us, therefore. A hyperscaler can be a sell to customer. They are also a sell with partner. On the public cloud side of their business, because of the richness of NVIDIA's ecosystem, because we have so many internet service customers and enterprise customers using NVIDIA's full stack, the public cloud side of their business really enjoys and values the partnership with us and the sell with relationship they have with us. And it's pretty clear now that for all of the hyperscalers, the public cloud side of their business will very likely be the vast majority of their overall consumption. And so because the world's CSPs, the world's public clouds is only at the early innings of their lifting enterprise to the cloud world, it's very, very clear that the public cloud side of the business is going to be very large. And so increasingly, our relationship with CSPs, our relationship with hyperscalers will include, of course, continue to sell to them for internal consumption, but very importantly, sell with for the public cloud side.
Your next question comes from the line of Joseph Moore with Morgan Stanley. Your line is now open.
Great, thank you. I wonder if you could talk to, looking backward at the crypto impact. Obviously, that's gone from your numbers now, but do you see any potential for liquidation of GPUs that are in the mining network, any impact going forward? And do you foresee blockchain being an important part of your business at some point down the road?
Pretty weird question.
We don't expect to see blockchain being an important part of our business down the road. There is always a resale market.
Stanley?
If you look at any of the major resale sites, eBay, for example, there are secondhand graphics cards for sale all the time, and the reason for that is because a 3090 that somebody bought today is upgraded to a 4090, or 3090 they bought a couple of years ago is upgraded to a 4090 today. That 3090 could be sold to somebody and enjoyed if sold at the right price. And so the volume of the availability of secondhand and used graphics cards has always been there, and the inventory is never zero. And when the inventory is larger than usual, like all supply demand, it would likely drift lower price and affect the lower ends of our market. But my sense is that where we're going right now with Ada is targeting very clearly in the upper range, the top half of our market, and early signs are, and I'm sure you're also seeing it, that the Ada launch was a home run. that 4090, we shipped a large volume of 4090s because, as you know, we were prepared for it, and yet
That one, Sherman?
within minutes they were sold out around the world. And so the reception of 4090 and the reception of 4080 today has been off the charts, and that says something about the strength and the health and the vibrancy of the gaming market. So we're super enthusiastic about the Ada launch. We have many more Ada products to come.
Your last question today comes from the line of Toshiya Hari with Goldman Sachs. Your line is now open.
Great. Thank you so much for squeezing me in. I had two quick ones for Colette. On supply, I think there was some mixed messaging in your remarks. I think you talked about supply being a headwind at one point, and then when you were speaking to the networking business, I think you talked about supply easing. So I was hoping you can kind of speak to supply if you're caught up to demand at this point. And then secondly, just on stock-based compensation, pretty mundane topic, I realize, but it is, I think in the quarter, it was about $700 million. It's becoming a bigger piece of your OpEx. So curious how we should be modeling that going forward. Thank you.
Sure. When we look at our supply constraints that we have had in the past, each and every quarter, this is getting better. Networking was one of our issues probably a year ago, and it has taken us probably to this quarter and next quarter to really see our supply improved so that we can support the pipeline that we have for our customers there. Now, that's our supply. We've also made a discussion regarding our customers' supply constraints issues. When setting up a data center, even getting data center capacity has been very difficult. And therefore, that challenges them in their purchasing decisions as they're still looking for certain parts of that supply chain to come through. So that hopefully clarifies what we were talking about regarding two areas of supply. In our stock-based compensation, what we'll see, it's very difficult to predict what our stock-based compensation would be when it arrives. We have provided to our incoming employees, but also once a year to our employees, and it's a single date in terms of when that is priced. So it's difficult to determine, but stock-based compensation is an important part of our employees' compensation and will continue to be. So we look at it from an overall compensation perspective. So up until now and when we do the focal, we'll see about the same size with a few additions for the reduced level of employee hiring that we have right now.
Thank you. I will now turn the call back over to Jensen Huang for closing remarks.
Thanks, everyone. We are quickly adapting to the macro environment, correcting inventory levels, offering alternative products to data center customers in China, and keeping our OpEx flat for the next few quarters. Our new platforms are off to a great start and form the foundation for our resumed growth. NVIDIA RTX is reinventing 3D graphics with ray tracing and AI. The launch of Ada Lovelace is phenomenal. Gamers waited in long lines around the world. 4090 stocks sold out quickly. Hopper, with its revolutionary transformer engine, is just in time to meet the surging demand for recommender systems, large language models, and generative AI. NVIDIA networking is synonymous with the highest data center throughput and enjoying record results. Orin is the world's first computing platform designed for AI-powered autonomous vehicles and robotics, and putting automotive on the road to be our next multi-billion-dollar platform. These computing platforms run NVIDIA AI and NVIDIA Omniverse, software libraries and engines that help the companies build and deploy AI to products and services. NVIDIA's pioneering work in accelerated computing is more vital than ever. Limited by physics, general purpose computing has slowed to a crawl just as AI demands more computing. Scaling through general purpose computing alone is no longer viable. both from a cost or power standpoint. Accelerated computing is the path forward. We look forward to updating you on our progress next quarter.
This concludes today's conference call. Thank you for attending. You may disconnect.
All right, guys. If anybody has any questions right now, feel free. We can probably discuss. And let me end this before. Let's see. What else are we talking about? So Rick, it's pretty impressive on the kind of work you have. Yeah, Orin's pretty cool. Sometimes I want to go back to just my every year engineering school. Right, you have those senior projects, and I know the previous generations of Orin, they did have like small consumer base. So I would definitely like to see how some of the engineering students are using maybe some of this kind of consumer Orin version to kind of create some pretty cool projects. Rick, is Hopper shipping now? They did mention H1 Hopper. The H100 is shipping out. Hopper without Grace. The Grace is still the Super Hopper Grace is still not. I wish we would have gotten a little bit more information on Grace, but not at the moment. Khaled, quick question. You repeat. Yep, and what Scott mentioned, Q1 should be Hopper with Grace. And like Scott previously mentioned, right, we have that interconnectivity, which is providing strong strength of the CPU, the GPU, and then all the kind of the Bluefield DPUs as well, which overall helps make customers more fond of purchasing from NVIDIA, right? I didn't get clearly how the CHIP Act is actually impacting results. So HIM4, it's not the CHIP Act that's impacting the results. Is the overall, we've seen few regulations that have come out from the United States government that is kind of not allowing NVIDIA to send some chips overseas. So I don't think they mentioned anything about the CHIPS Act impacting results. I think it was more the kind of regulations impacting the results, especially with the H100 and them having to kind of do the A100. Some really good things that I want to just share. What I really enjoyed about this earnings call is, one, the forecast for the upcoming quarter. I do believe they are being very, very conservative here. We still have huge demand for the North America. The H100, I believe, is going to be adopted very, very heavily. We have that Microsoft deal. We have that Oracle deal. The other thing that's super exciting to me is the GAAP and non-GAAP gross margins for the upcoming quarter. We can see they're going back to the 60%. If we take a closer look at GAAP gross margins for this quarter, it was 53% and it was 43% in Q2. So it seems like gross margins are going back up to previous numbers of last year. So that's super exciting. I do believe the main reason is they're going to be selling more products in the data center market than in the consumer market. So in the data center market, you tend to have higher gross margins. So I do believe that's going to be fueling that. What else do we have here? Like I said, in forms of products, nothing too crazy. Just the announcement that we've seen, the overall numerous partnerships that they mentioned with Microsoft, with Oracle, the overall kind of wins they have in the automotive party. So I plenty of tailwinds. Again, this earnings call wasn't anything crazy. What I really see is more that it's just it's kind of the bottoming out, at least in the consumer space. So Grace is an ARM-based CPU. It's definitely it was crazy that they were not able to purchase the ARM company. But I mean that the ARM-based CPU that they are going to come out is going to continue with this kind of push that they're going of more efficient power. What we're seeing with ARM products, ARM CPUs, is they definitely are a little bit more power efficient with base compared to your traditional x86 architecture, and them kind of having the super strength of the H100. I do believe this is going to save data centers, cloud server providers a lot of money if they go with this ARM-based Grace CPU and the H100. And like they mentioned, even a 10% energy efficient for a multi-big data center is a big deal. It can save companies millions of dollars. So it's going to give them a lot of incentives to kind of go and purchase these super chips that NVIDIA is kind of creating. What else did we get to learn? Rick, I think you mentioned of how Nvidia's kind of penetrating, if they're penetrating the if Nvidia's penetrating the universities in forms of like maybe computer science and electrical science. I want to say one thing. I'm always looking out there to learn. And one thing that I normally see is the big players like Google, like Microsoft, like Meta Platforms, they always show, they have programs out there so you can learn the software and the tools that they use. One thing that we're seeing right now is NVIDIA, like Scott mentioned earlier, right? They have this hardware, but more importantly, they have the software that for their products to continue to be used, they need to kind of either renew the software and continue using it. So I do believe companies like Microsoft that are investing dramatic amount of money on their clouding solutions, they're going to start having courses out there that are going to be using NVIDIA's tools as well. So I do believe it's going to be not only NVIDIA pushing kind of form of education to the next engineers, to the next software developers, to the next data center engineers, but companies like Microsoft, like Oracle, like Meta Platforms that are investing so much money into these hardware tools and into these software tools, they're also going to be using that to push education so the engineers coming in know what platform they're working with, know what platform they need to be proficient in. So I think NVIDIA is going to have this huge effect because they have the huge players behind them. So Khaled asked a pretty great question. I don't know if here in is any of the viewers here might want to answer. Khaled asked, where was it? Hello, I have 90 Tesla stocks. It went like 45% down since I bought it. What would you recommend, please? I mean, this is interesting. I think at the end of the day, some of my big players from their peaks are down 45%, right? Like NVIDIA. I think it all depends on two things. For me, if NVIDIA went down 45%, I'm a huge bullish bull guy on this company. It's already a nice position in my portfolio. So for me, I don't dollar cost average too much into it. Main reason, it's a big position. If NVIDIA was a smaller position, I probably would have bought more. But to me, portfolio position sizing is very important. So I think first is position sizing. How big is this position already? And do you feel comfortable adding more into it? The second question is, how bullish are you into this company? And are you able to kind of maintain the volatility that it can push in the future? So for me, for NVIDIA, like that example, it's already a big position, so not one I would purchase, but it's a company that I believe in the long term, even though it might be volatile, I do believe can return great returns, so I have no intentions of selling. So maybe if you can maybe use that thought process for your own thoughts, Khaled, hopefully it helps. So what else do we have? I mean, like I said, nothing too crazy here in the overall products. I am seeing one thing that I did see, and they did mention it, is that stock-based compensation is a little bit higher compared to a year ago and compared to a quarter ago. Justin, what's going on, Justin? Opinion on SXLL or SOX short-term plays. So those are leverage, right? Those are leverage ETFs in the semiconductor market. My God. Let me see. Let me just, I don't know. This person is annoying me. Hide user on this channel. Nope. Is that it? Okay, yeah. So Justin, I would say, I would say, for me, leverage ETFs are not are not something I would do, right? I'm not here trying to time the market. I'm just purchasing semiconductor companies for the long term of things. I do believe these leverage ETFs, they're better if you're more of a trader, not as an investor. If you're an investor, I personally just enjoy your traditional ETFs. But if you are a trader, those positions are SOXL and SOXX definitely can provide great returns. Again, those are more trading, not investing, in my opinion. Crypto guys, how are the earnings? Earnings were okay. I mean, nothing crazy. We saw kind of met expectations. I think just kind of like I mentioned earlier, upcoming highlights, upcoming quarter doesn't it seems like there might have been a bottom, like we reached the bottom here in the semiconductor space, at least for Nvidia. So let's see. For Khaled, keep buying Tesla because free cash flow is massive in Tesla. This is an opportunity to DCA. Look at Morgan Stanley yesterday. Notes that Tesla might become value stock in short term. Appreciate those thoughts. Again, I'm pretty sure Tesla is like Nvidia. Many people might consider this overvalued. Maybe some might see this more of a growth play. So it all depends on the style of investor that you are, position sizing, and are you able to ride the volatility wave? Because at the end of the day, you might make a great investment purchasing the right stock, but emotions might actually make it the worst investments of all time. So even though a stock can do well, if your emotions make you act against it, then it can actually be the worst investment of all time. So always be mindful of how your emotions are kind of dictating how you invest in stuff. So let's see, do we have any questions, guys, here from NVIDIA? Or you guys know I'm huge in the semiconductor space. So if you guys have any questions on the semiconductor market, were you guys, Jensen and his wife gave them a $200 million supercomputer. Yes, that was to the Florida, Florida, was it a Florida university? I forget what was the university, but I believe it was their alma mater. Twitter hangover is a window of opportunity for retail investors like us. So let's see. Oh, it was Oregon State. Okay, I knew it was something that was pretty interesting. So let's see AMD after hours. AMD is up 0.76%. But I I think it's insane, right? I mean, Scott, how rich these people are, how they're able to just kind of gift the supercomputer. It was the University of Oregon. Yep. I was mistaken because I know earlier today I did an episode on the top 10 supercomputers, and one of them was actually a Florida university. So for some reason I thought it was that one, but we can see. Constant. All right, guys. If there's no more questions, I am gonna probably release a short video later on tonight. Appreciate the support, guys. You guys help out so much. Rick, Scott, Wendy, even though Wendy was pretty mean. Khaled, everybody, crypto guys, everybody who was here, I appreciate you guys supporting. Make sure to check out that YouTube channel that I just created, the #1 semiconductor podcast in the world. The link is on the pinned comment. All I do is talk about semiconductor stocks there. But again, guys, thank you so much for the support. Hope everybody has a good night. And I actually got to go help my wife with some stuff. So take care, guys, and appreciate the support like always. So let me end stream and have a good